Welcome. I'm Greg Burke, and this video provides a high-level overview of my dissertation and job market paper entitled Equity Crowdfunding Analyst Reports. If you're interested in learning more about the equity crowdfunding market or would like to review my results in their entirety, please check out the link provided in the description of this video, which will direct you to my most recent draft posted on SSRN. As a practical matter, I'll be on the 2024 to 2025 rookie job market. I'm a Duke graduate who is wrapping up a visit at Indiana University in advance of going on the rookie market. With that said, let's get started. My motivating question here seeks to understand how equity crowdfunding or ECF investors, which are primarily retail, how they make decisions when faced with many investing opportunities, accompanied by very limited information. And my specific research question asks if Kingscrowd Analyst Report recommendations are useful to these investors. So why might someone be interested in understanding how information intermediation functions in this market? The equity crowdfunding market is a new, large, and growing capital market that's dominated by retail investors. And disclosure regulation in this market is lax, and enforcement functionally non-existent. Plus, startup firms by their very nature are inherently opaque. And the SEC staff is currently considering changes to the regulation itself. Now, the use of analyst reports is a bit unclear because, for one thing, these reports arrive quite untimely after most pledging has already occurred. And existing research suggests that investors in this market may actually not be information sensitive, and they may have non-financial motives. And even if they are informationally sensitive, it is possible that KC lacks credibility for investors to rely on their recommendation. Finally, the fact that KC is the only analyst in this market worldwide may suggest that investors do not demand analyst report recommendations. I first begin my analysis by considering if investors acquire KC report recommendation information. And I find an increase in page traffic immediately following the release of a report. This implies that investors are going to the associated KC raise page and navigating to the report after it's released. Now, this is a necessary condition for them to integrate this information into their pledging behavior. And in this analysis, I find an increase in the sensitivity to report recommendations immediately following the release of a report and dissipating over time. This implies that investors are getting this information from KC, navigating to the associated offering page where they can pledge for the first time, pledge more, or withdraw an existing pledge. This all boils down to a 1 unit increase in report recommendation favorableness is associated with 35 to 46% increase in the average weekly investment pledging. That equates to approximately $32,000 in pledging over a 6-week period. And this is strongest in the first 2 weeks following a report release. These results are robust to offering fixed effects, a propensity score matched sample design, and finally in subsamples where confounding information events are absent. I also find recommendation investment pledge sensitivity is concentrated where market uncertainty and investor sensitivity to information are high and not present when these things are low. Recommendations are also associated with ending capital contributions, total investor participation, the probability of future ECF offering, and the amount of capital raised in a future offering. In the process of preparing a propensity score matched sample, I estimate a selection model where I find that report production is associated with investor interest, expected firm success, and the richness of the issuer's environment. My paper contributes to 3 main literatures. The first, crowdfunding, where there's limited research on the US Reg CF market, and is the first paper to study information intermediation in a crowdfunding market. In terms of the information processing literature, my setting allows for me to isolate the use of information intermediation by retail investors where information is scarce and opacity is high, and there are many investing opportunities available. Finally, I contribute to research in opaque capital markets, such as the municipal bond market and the OTC market. From a practical perspective, I'm responding to a call from the SEC staff in May of 2024, where they're starting to consider investor protections and other changes to regulation crowdfunding. Thanks for watching my presentation. If you'd like to reach out to me, please use my email here or check out my website. Again, I'll be on the 2024 to 2025 rookie job market, and I hope to hear from you. Thanks so much.